In today's video, I am going to be breaking down to you my biggest paying dividend stocks and ETFs. Now, this is going to be all based on percentage, but I'm going to give you these names mainly to give you an idea on what you could also invest in. Always do your own due diligence, know what you're investing in, never listen to a random YouTuber. Let's get down, let's check out these ETFs and stocks. So pretty close to the top of the list is Bank of Nova Scotia and CIBC, which when it comes to cost of or yield of cost or on cost, basically 5.4% for CIBC on average for me, and for BNS it is 4.9. Not too bad. However, let's look at the top 5. I've got HMMJ, ZWH, ZWC, ZWK, as well as TXF. Now, out of those 5, the most interesting, I'm going to say, is HMMJ. I am very, very big on the marijuana stocks, especially when it comes to the United States legalizing marijuana, and HMMJ is an interesting way to play it because, of course, they pay a dividend, but the reason why they pay a dividend is not because of a covered call strategy or because the stocks pay dividends, because most of them don't. The reason why and how it can pay a dividend is because it loans out the shares to short sellers and then they make the interest back and pay it to you as a dividend. So let's get down and let's break down these 5 amazing and interesting ETFs. The first one is HMMJ. Now, this is the second mistake that I am now noticing on that app that I was using, which is called Track Your Dividends. They are a bit off when it comes to the most current dividend yield of the ETF, HMMJ, which is 3.2%. I've done the math just now and track my dividends. The website is a bit off. Yahoo is right on. But still an interesting ETF, so I'm still going to be breaking it down to you. Its average volume is quite high, but it's also very high when it comes to the expense ratio. The MER is 0.85%, but any ETF that's going to be doing a lot of manpower is generally going to have a higher MER, and this one, as I was mentioning, does pay a dividend by the short interest. So that is how this one is able to pay such a high dividend. However, the weird thing with HMMJ is the fact that it's totally different every single quarter. So it really comes down to how many people short the stock. So with now the American government starting to legalize weed, I would expect the dividend on this ETF to dip just a bit, mainly because there's going to be less people shorting it. However, once those stocks start hitting ridiculous highs, so for example, if Aurora Cannabis gets back to $100 a share, now you're going to be looking at essentially a lot of short sellers coming back in, of course pushing down the price temporarily of those stocks. You'll be then getting a bigger dividend, but if you hold the ETF through that period and then the stocks start growing again, then you're going to be not just making that dividend during the tougher times for those stocks, but also you'll be able to now basically grow your portfolio while the stocks are doing well. So either way, I think, in my opinion, it's a win-win. And of course, as we can see, this has had a very interesting life. This was, of course, when the Canadian government was through the legalization periods, as well as the start and initial periods of the marijuana companies starting to make money. Of course, it did dip down because the Canadian economy, when it comes to the market of marijuana, is big, but it's not as big as they really thought. And that's no real big surprise to me because the Canadian economy is really small if you really think about it. So, of course, there was this spike. What happened when the American government came out, Biden got in, and everyone thought, well, he's going to be legalizing marijuana, and there is a big push to legalize it federally. I think they're going to have, of course, some pushback, but it does seem like they're going to try and do it before the end of the summer. So if it does get legalized, I really would not be surprised if it started reaching that $20 mark once again, because now the U.S. market for marijuana is a heck of a lot bigger than the Canadian market. The biggest companies that this one does own is, of course, Tilray, which is one of the bigger companies, same as Canopy Growth. We all know that one because of Snoop Dogg is currently being paid by them, as well as Martha Stewart. And then there is a few others. You may have also heard of Kronos Group. Scott's Miracle-Gro is actually kind of funny because I like to laugh at it because it's more of a fertilizer company, but you're going to need that stuff when it comes to basically comes to growing the marijuana. They're going to be needing companies like Scott's to give them the soil, the right soils and the right fertilizers and things like that. So that's kind of just funny to me. GW Pharma, which I think is just about to get taken over by somebody. And of course a few others, but the reasons why I think they have companies like Scott's Miracle-Gro company is mainly because they want this ETF not just to have crazy fluctuations. A well-known company like Scott's will allow the ETF to have growth, but a little bit more stabilization. Next is ZWH, which is the BMO US High Dividend Covered Call ETF. This one currently trades at the time of making this video, is around $21.25 and its expense ratio is 0.71. Now ZWH, its volume is 34,000 on average, which is pretty good. I really doubt that you're going to be buying 15,000 or 17,000 or more shares of this ETF in one sitting. This one is a 6% dividend, which is really nice. And it has, of course, a lot of up and downs, but at the same time, we can see that this is growing steadily even before the economic crisis of COVID. However, it's growing really nicely since it started to stabilize. It started to trade sideways, as we've seen here. However, at the same time, this is good because, of course, we don't want a stock or ETF to go exploding forever. We want it to then level out for a bit before it starts growing again. We want it to consolidate. That's just a normal market. Now, its top 10 holdings is Bank of America, Cisco Systems, Home Depot, JP Morgan, Microsoft, IBM, AbbVie, Chevron, AT&T, as well as Coke. These are all very solid companies. And something about BMO covered call ETFs is the fact that, and they actually advertise this, is when they do their covered calls, they do them out of the money, which generally will give you a lesser yield when it comes to the premiums, less money coming in for the dividend. However, at the same time, it's a lot more stable because if you're getting closer to the money, then basically what happens is you'll have less growth in that ETF. If you're out of the money, you're going to have the closer to market growth, but still getting a higher dividend because of the premiums paid by the options. This next one is ZWC, BMO CA, Canadian, High Dividend Covered Call ETF. Yes, another covered call. All my top dividend payers are covered calls. This one pays 7.5% dividend. 0.72% MER, and over 230,000 shares traded on average every single day at 7.5% yield. ZWC is absolutely amazing. I've actually read that ZWC is the biggest ETF covered call in Canada. I'm not too sure if that's 100% true, but it is nice to hear. Now, this one has had some absolutely insane growth ever since the economic crisis. It has not reached its $19 pre-COVID high. Of course, it's been higher. This one does have some interesting downturn, but we also have to remember that the Canadian market was also not doing that great during this time. So this is not a big surprise. It did stabilize before the COVID crash. The bigger stocks it does hold is RBC, as well as TD, Bell, Bank of Nova Scotia, CIBC, Manulife, Enbridge, TransCanada, BMO, as well as Great-West Life. I actually think that if you could buy TransCanada is a very good company to hold right now, very high dividend. I think they've got some growth coming to them, mainly because of the price of oil. More and more companies are going to want to mine it, and of course, when the price of oil goes higher and higher, the viability of the Canadian oil sands, of course, goes up. ZWK is absolutely one of my favorites. I was getting this thing back when it was like 9.5%, 10% yield. Absolutely amazing. I've been buying it since, but it's currently at 7%, which is still very good. Average volume is 30,000. Currently, the 1 day's volume is 100,000, which is just absolutely insane. Very, 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 very good ETF in my opinion. Has not been around for too long, but it did have that small increase before the COVID crash. And since the COVID crash, it has accelerated. Of course, it's done extremely well. It's currently stabilizing. It's currently, in my opinion, on sale. It's pulled back just a bit. How long will this pullback hold? Not too sure. Its biggest companies and the favorites, the ones I've held before individually as stocks, is Bank of America as well as Citigroup as well as JP Morgan, but the rest of them are really good as well. I currently don't own any of those stocks individually, but I do hold them obviously through this ETF. And then the last ETF, my biggest percentage payer is TXF. This one is absolutely fantastic as well. MER is on average when it comes to the cost of a covered call ETF, 0.71%. Basically what that MER stands or means is for every $100 that you put into the ETF every single year, they will take 71 cents, which is really not all that bad. Usually mutual funds are like $2.50, so this is still cheaper than a mutual fund, and you're getting a yield of 11.5%, which is just ridiculous. This one also has some fantastic growth, a consolidation, and some more fantastic growth. This is holding amazing tech companies. Nvidia being my favorite out of them all right now. NVDA is something that if you wanted a high growth over the next little while, that's going to have it because of the chip shortage. But Alphabet, which is Google, Applied Materials, Adobe, Amazon, Facebook. The only one I don't like is Facebook because I really don't like how they run their business. But I, of course, am stuck into using them, as well as Apple, IBM, and Microsoft. Out of Apple and Microsoft, I personally prefer Apple, but Microsoft is still pretty good when it comes to the cloud. Same as Amazon. Amazon is addicting for a lot of people when it comes to shopping, but their cloud service is actually very good as well. So those are my highest paying ETFs that I currently hold. Highest paying stocks is CIBC as well as Bank of Nova Scotia. Bank of Nova Scotia right now is one of my more favorite banks to own right now, but I cannot deny BMO has been a massive grower for me. National Bank has been a national grower, or amazing grower for me, I should say. TD is one of my favorites. That's the one that I bank with every single day, so of course I'm going to hold their stock. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. I'll see you guys again next time.